atención porque hay una intervención que es muy interesante. Hago el spoiler, la he visto ya y la recomiendo, de Alexandra Jour-Schroeder, directora general adjunta del FISMA, ¿no? de la Comisión Europea.
Ladies and gentlemen, good afternoon. I will start my intervention with an overview of how we see the competition landscape for banks in the EU, including the growing role of new digital actors and on the need for banks to consolidate to remain competitive. I will also use the opportunity to touch upon the risks we see emerging and finally provide the European Commission perspective on the importance of building a true saving and investment union that works for our citizens. Let me start with an overview of today's bank landscape in the European Union. And actually this is positive. EU banks stand on a solid footing, as confirmed by the most recent European Banking Agency stress test in summer. Capital levels are high, liquidity satisfactory, and credit risk remain under control, with a very low non-performing loans ratio at 1.8%. And it's also positive that the EU banks' profitability has strengthened. This positive environment is recognized by the markets with higher market valuations of European banks. One important aspect in this environment is that banks are managing to keep their cost structure under control. And this actually reflects the profound transformation the sector has undergone in recent years by embracing digitalization and innovating on how they carry out their activities. Digitalization, of course, has also changed how consumers approach banks. This opened up new opportunities for new entrants in the market, such as neobanks and fintech platforms. And these players are effectively reaching clients throughout the European Union by offering new interesting services and user experiences. Yes, there are risks that may be more pronounced in relation to these new emerging business models. Let me give you a few examples. For instance, IT incidents may be more disruptive for those banks vis-à-vis traditional banks that rely still on physical branches. Now your customer procedures may be more challenging. However, we believe the current prudential framework sufficiently covers those risks, and the supervisors actually have all appropriate tools at hand to help banks manage and mitigate them. Despite the positive assessment I was just referring to of today's landscape, we consider that EU banks could and should do more to advance cross-border integration. Today, Europe's banking system remains too fragmented. On aggregate, European banks remain smaller and less profitable than some of their global peers, making long-term investment more difficult and increasing the cost of capital. Indeed, this does not only create a cost for banks, but also for consumers and ultimately for Europe's capacity to finance its own growth. Therefore, the Commission found that the moment has come to assess more in depth the overall situation of the banking system in our single market, including the evaluation of the banks sector's competitiveness. And we will do that, and we have started already having outreach to many of our stakeholders, and our plan is that we will present our conclusions in 2026 and possibly in the second half of that year. If we want, ladies and gentlemen, a financial system capable of financing major industrial projects and financing innovation we need so deeply, we need indeed a banking sector that can operate at sufficient scale and also very much across borders in the European Union. Scale evidently is necessary also for economic sustainability of our banks in the European Union. Technological developments require growing investments, and as I already said, the financial landscape is evolving rapidly with new players entering the market, offering new ways to make payments, manage savings, and access financial services. Evidently, these developments bring benefits, especially more innovation, more efficiency, and also more choice. But at the same time, as always, it also comes with new challenges. And what I mean by that, operational resilience, cyber risks, data governance, but also fair competition. And in this context, again, size is important to have the capacity to manage all these challenges I have just speaking about. So our approach must be to support innovation, but at the same time ensuring that the risks that come with new ideas, new entrants, a new landscape are properly addressed. And that is very much the principle behind a couple of new pieces of EU legislation. And let me just give you two examples. There is, of course, our Digital Operational Resilience Act, we call DORA, and also the legislation now in force on markets in crypto assets, MiCA. There's also the new, very interesting and very quickly moving work on instant payments that bring lots of opportunities, but also some risks. And finally, of course, we have to look in the broader picture when it comes to payments and financial data. In short, we must enable Europe leadership in financial innovation while ensuring stability. And this is particularly relevant as risks to financial stability remain elevated, especially in the context of continued geopolitical uncertainties we witness. You know it all, trade policy uncertainty has fortunately eased to some extent since the peak we saw in April this year. But let's also be clear, renewed trade and other geopolitical tensions are likely to persist. Therefore, Europe must be prepared for a world where economic security, resilience, and strategic autonomy become our permanent priorities. We will continue to monitor key risks to financial stability, including the ones linked to the current fiscal challenges. We also see potential corrections in market valuations and cyber security threats I was already referring to. Ladies and gentlemen, let me finally sketch out where we stand at basically the end of 2025 to make our vision for a savings and investment union, the SIU, a reality. And let me be very clear on that. We want to strengthen Europe's investment culture, one in which citizens can earn better returns on their savings as they do today, and where companies can rely on stable long-term funding. And to be also very clear with you, we are not yet there. Following the presentation of our SIU strategy in March, our vision, our blueprint, we have significantly accelerated our work because we had to do this, reflecting the urgency of mobilizing reliable investment for European priorities. And there are many: green technology, digitalization, but also defense. And this is fundamentally about creating opportunities for citizens to grow their savings, and opportunities for business to have access to finance to scale up. A central pillar of our strategy is indeed to help citizens make better use of their savings. And let me illustrate this with a few examples. First, we have issued a recommendation to member states, and this is about what we call savings and investment accounts. these accounts want to provide very simple and very flexible ways for individuals to invest and to give also some incentives. We think they should come with a tax advantage, but also very simple and streamlined process that is easy to do, easy to manage, and really makes investing more accessible as it is today. There already exist these kind of accounts in some member states, and therefore we thought we do a recommendation. So this is not binding, but it is a bit more than a pure invitation to member states, because we really think we need to have a clear model for those citizens who wish to establish or improve their savings via those accounts. And I'm pretty confident that these accounts could help millions of Europeans move from being savers to becoming investors. Second, we launched the EU's first financial literacy strategy, and that goes a bit hand in hand with this idea of an account. Because today, only 18% of EU citizens have sufficient high financial literacy, and this really has to change. If we want this genuine investment culture, people must feel confident navigating financial decisions. And therefore, we need to support what's happening in the member states at national level, but also provide an EU framework that would finally help individuals to feel comfortable, to understand, to make informed choices about their daily finances, long-term savings and investments. So this is for us not just a luxury, but a foundation for economic empowerment. Third, and also very important, we have presented a package of ideas how we can strengthen supplementary pensions across the Union. And it is well aware that there is an issue in basically all member states. What we're looking for is improving coverage and performance in this area, not only to support adequate retirement income, but also increase the pool of long-term capital available for productive investment in many important areas. And beyond these initiatives, we have finally proposed a wide range of measures to improve the functioning of EU capital markets. Because here again, we see still a lot of fragmentation and barriers we should get rid of. And the ideas we have now on the table are going in many different directions, but they all have to come together to, in the end, be meaningful. Again, just for the illustration, a few examples. One of the measures we took some months ago is to revitalize the securitization market, because we want to help institutions to mobilize capital more efficiently, and also very important, freeing up bank capacity for additional lending, in particular for small and medium-sized enterprises. And just last week, so very fresh, the Commission adopted its very ambitious, I think, market integration and supervision proposal. It's a package of measures that indeed aims to remove barriers and in the end to facilitate the integration of EU capital markets. The scope of this initiative has to be broad, and it is broad. It covers the whole trading market landscape, trading, post-trading, and also asset management sectors. And we have also made sure that in the package we built in aspects of innovation and also, very importantly, supervision. Our aim is basically to enable a more integrated, efficient, and competitive European capital market that better supports cross-border investment we are lacking today. So, ladies and gentlemen, I'm coming to the end of my intervention, and let me conclude by underlining that the reforms being undertaken at EU level are not just simply technical adjustments. Together, all the initiatives I was speaking about mark significant progress towards a union where savers can confidently become investors, where markets will operate seamlessly across borders, and most importantly, where the European Union has a financial strength. It needs to remain competitive in the decades ahead to the benefit of our economy and, of course, of our society as a whole.